A few weeks ago, we published a video saying one thing. As long as gold holds the 4,200 level and silver holds 70, we are not expecting a major downtrend. Since then, the headlines have been non-stop. Middle East tensions, oil spikes, dollar rallies, dollar crashes, recession calls, inflation calls, and the usual noise. And that brings me to something important. MarketVelugu is not a channel that makes a video every day because a headline appeared. There are plenty of channels doing that already. We focus on structure. We focus on hidden signals. We focus on what the charts are saying when nobody is paying attention. Because the biggest moves rarely begin in the headlines. And that is exactly why we didn't change our view. Let's look at the charts. Gold corrected, tested the trend line and held. That's the update. No crash. No structural breakdown. No reason to suddenly become bearish. In fact, the momentum indicator continues to show improving conditions beneath the surface. The trend remains intact. Silver did exactly what silver always does. It scared everybody. It fell back toward the key 70 level, tested that support, and held it. And continued respecting that long-term trend line. Again, correction, yes. Bear market, not based on the structure. So if you look at the momentum, we continue to see higher lows developing underneath the price action. Now the gold-silver ratio chart. This is where things become interesting. The gold-silver ratio remains in a downtrend. That means silver continues to perform or outperform gold over time. Historically, when gold leads first and silver begins catching up later, the move is often not over. The leadership shifts. Gold starts the move, silver accelerates the move. That remains one of the most important charts we are watching. Now let's zoom out. While everyone is focused on daily dollar moves, we are looking at something far bigger. A decade-long hidden bearish divergence in the dollar index. Momentum has been weakening for years. The dollar is still moving around, but the underlying strength is fading. That's very different from a powerful secular dollar bull market. And it helps explain something many people are missing. Why are gold, silver, copper, oil, and commodities holding up so well despite all the volatility? Because the bigger story may not be recession. The bigger story may be monetary transition. A gradual shift toward real assets. Not overnight, not next week, but structurally. And that is why our view hasn't changed. Gold continues to hold support. Silver continues to hold support. The gold-silver ratio continues to favor silver. And the dollar continues to show signs of long-term momentum deterioration. Could we be wrong? Absolutely. Markets are probabilities, not certainties. But we will continue following structure instead of headlines, because headlines change every day. Structure changes very slowly. And when structure changes, that's when MarketVelugu changes. Until then, we stay with the trend. Thank you for watching, and I will see you in the next one.